Hello, Luna devotees. Weary traveler, you're here again today to look at a fire and then burn Tompkins in a massive transaction. Just what is it? If you like what you see, please consider subscribing. For the purposes of our Lunar Classic buyback and burn program, let us examine this one. Even during the UN period, we had a limited amount of time to form our own rebels. Those who have not yet registered with the Max but who do so through this special page and trade will be disqualified. To sign up for an account and take part in this endeavor, please use the links below. The duration of every even ending is 30 days. That means we'll get a lot of talking in throughout the next 30 days. Users who sign up through the referral link on this website will receive a 10% trading fee discount on Max initiative for each qualified user whose now deposit amounts throughout the campaign term are $500 and a spot trading volume of $2,000. Trade $10,000 worth of futures with it. PT Max, a supporter of the effort, will throw $20 worth of Luna Classic into the fire. This is the only one. All new signups made during this campaign's time period will be factored into the aforementioned MAX initiative total. In this case, take the initiative. The terms and conditions and risk disclosures are included below. And with that, you have learned everything there is to learn. Finally, it's time to leave. Terra is 3.6 billion in use and utilize it. So let's go on to the next piece of information for the turtle in a classic. A fresh research from CoinDesk Korea suggests that Terra Labs may be sitting on nearly $3.6 billion and Usati in the United States. According to the article, the money could be used for exchange and defeat pricing, manipulation, or money laundering. Nonetheless, regulatory bodies must double-check with Binance Coin Exchange, effectively asking KuCoin to affirm the same CEO of Terraform Labs. Duke's wealth is public knowledge thanks to the S.A. or Terra Foundation he established. Bitcoin's use of Luna is one example. The company has cash on hand to hedge against price volatility. RT deflation, however, revealed on-chain data analysis that wallets owned or controlled by Terraform Labs and Luna Foundation Guard included a sizable sum of money with unknown sources and information. In sum, $3.6 billion in illegal funds and their accompanying means of circulation were uncovered in this case. This research specifically found that the funds were used to engage in market manipulation and money laundering associated with the current classic Luna. Following the failure of the Terra initiative on May 7th, the previous Luna on DeFi instituted regulated exchanges. Upsala Security, a blockchain security firm, and CoinDesk Korea, a blockchain research firm, nonetheless employed online data forensics to investigate the cause of the network's failure. In this way, they keep an eye on the flow of coins near the wallets that various investigators have traced back to the point of the Terra collapse and wallet address. Is this true? Therefore, it confirms that Terraform Labs and Luna Foundation Guard had moved seed and a transaction for $7.4 billion into Binance wallets, and on-chain data was utilized to prove that the wallet belonged to or was controlled by Lev G. I seem to have compromised the CoinDesk server. Did additional on-chain data studies to track the flow of information and discovered $3.6 billion in funding. To add insult to injury, there were hints of U.S. deflation in May, just 6 days before Luna Classic plummeted 300 million user TS, and above the 380 billion won were deposited into the large exchange wallet, which could not be verified and was later found to have escaped to another Binance exchange wallet. No longer can this money be followed through on-chain data analysis after it was moved out of the exchange wallet. We have stood the test of time. Subscribing is mandatory. Don't forget to comment on the CNN X1N piece is only the beginning of the things we may share with one another.